There is a PD array that not a lot of people are aware of, but it's actually significantly better than all of the PD arrays you use, include fair value gaps, order blocks, highs and lows, inverse fair value gaps, and breaker blocks. This PD array by itself will confirm the manipulation, the market structure shift, and the bias, as well as it can be used as a POI to enter from. I'll explain everything about it in details and finish the video with a full trading plan, a step by step, just using this PD array. I promise you that it's gonna click if you keep watching the whole video until the end. Let's get into it. So first of all, we need to understand the PD array matrix. Why? Because we're actually dealing with one of the PD arrays. It's not included here. That's why, not a lot of people are aware of. I mean, I explained it before, but still people are sticking with those because they are more popular. But popularity doesn't mean they're better, or any of those is better than the one that I'm gonna explain. So PD array matrix, when looking at any price action leg or a range that has a low and a high, this is now a range. Any of those ranges on any time frame will include some or maybe all of those PD arrays. You see, at the low, this is actually a low, which we can see a swing low. Now, first of all, PD equals premium and discount. Okay, so 50% here on this range, this is 50%, below is discount, above is premium. Now, when looking at the range or the half of the range below, the swing low is here, most likely. We have an order block here, and then above it we have a fair value gap, and then maybe a breaker block, and then a mitigation block. Okay, and then 50% here, we started the same thing, but the opposite. We have a mitigation block here, breaker block, fair value gap. We have the high here and an order block here. You see, most likely when we're coming lower, now we have the other side of the range. I mean, most likely like this. You see, this is the range. We have order block here, and we have an order block here. Same thing. Now, when it started to come lower, we have an order block here, and same thing goes on and on. Okay, also on any range, this is what we have on the PD array matrix. We have a set of tools, right, in a specific order that we can enter from. Some of those will confirm a bias, some of those will confirm a market structure shift, but not any of those, even including fair value gaps, which is actually my favorite PD array of those. It doesn't actually give you the best confirmation, not the same as the one that I'm gonna explain today. So the one I'm gonna explain, I mean, most likely, you see, if we look at this swing high and we look for the liquidity sweep, yes, liquidity sweep give you a hint that we're gonna come lower, but it's not the extreme or the absolute confirmation that you're looking for. However, the one that I'm gonna teach you today is gonna have clearly manipulation, is gonna have a market structure shift including with it. So it's actually coming with a bias. So the creation of that PD array is a bias by itself. Now, one of the common mistakes that actually a lot of people do when it comes to PD arrays is that they think any PD array is valid, right? So for example, we got an order block here. They think that's a valid order block when in reality it doesn't give a lot of reward to risk. We can see that, oh, we have an order block here, but price actually goes above it. When you think that price should go above it or below it, then you'll see that the opposite is happening. It's actually the order block that is working. So for example, you're looking for the sweep here, but in reality, price comes to the order block. And then the other day or the other time, you're looking for this order block to be working, and then it's actually a liquidity sweep. So you see how there is a lot of discretion here, especially when you use more than one PD array. You're going to see that sometime this PD array is respected, the other time the other one is respected, the other time there is a liquidity sweep, and all of the PD arrays are disrespected. So there is nothing clear. And one of the struggles, because PD arrays are used as POIs, a lot of people actually struggle with the entry, which is in reality struggling with the PD arrays. So what are we doing today is looking for a specific PD array that is, when sticking to it, it's going to help us with not being subjective, and it's much more clear than the other PD arrays that we have. Okay, so just sticking to the specific PD array, we're going to have that edge that, okay, I'm not looking for a liquidity sweep. I'm only looking for that PD array. I'm not looking for an order block. I'm only looking for that PD array. It's not going to be subjective. It's more objective when looking for this PD array. So you see, sometimes we have this range, sometimes price will come to the order block, sometimes to the breaker block, sometimes to the fair value gap. But when sticking to that specific PD array, we're not going to have this no more. You see, price comes here exactly, and you will know which PD array I'm talking about. The goat of PD arrays, the best PD array that ever existed, is a balanced price range, PPR. Now, in my market makers model, I did explain that market makers model are nothing but a balanced price range. I mean, if you could watch that video again, what is a market makers model? It's price going up into a PD array coming lower, right? In this price action here to here, what is this? It's actually as a whole is a balanced price range. One bullish candle, one bearish candle on the higher time frame. Or we're looking at the lower time frame, consecutive bullish candles, two consecutive bearish candles. At the end we get that V shape or the inverse V shape. So something like this. The same thing when dealing with balanced price range. Balanced price range is the overlapping of two fair value gaps. The same as any PD array. What I really prefer, even though balanced price range have an edge over the others, that you can look for them anywhere. But still, if you're looking for one-to-one, I'll say you can look for it anywhere. But if you're looking for higher reward to risk, then you want to align it with the higher time frame level. And we're going to include all of that later in the video. In this balanced price range, what was happening is we are coming lower. But while we're coming lower, what we had is, first of all, a creation of a fair value gap near a higher time frame level, which I talked about before, that this is a manipulation fair value gap. So you see this fair value gap that is created on this side, this bearish fair value gap. Even though we were bearish, yes, but we were approaching another higher time frame level, which now, this fair value gap here is just not valid. It's a manipulation fair value gap. It's created here in order to convince people to go short, to have more liquidity here, in order for anyone who wants to buy here to trigger their orders, anyone who's buying here. So when we have more liquidity here, we can actually look for more expansion to the upside. Unlike if we have no liquidity, it's going to take more time to go higher. So this is nothing but a manipulation in order to have that impulsive move to the upside later. So manipulation fair value gap, in other words, inducing people to go short here. We are going lower. We had that liquidity sweep, which is the real manipulation. So we hit that key level on the higher time frame. That's a bias by itself, right? As I discussed in my daily bias video, we got that bias here. We started going higher. If you can see that we actually closed above, what is that? That activates this as an order block. The last bearish candle closed above. That's a change in state delivery. That's an activation of this now as an order block if price comes back to it. So that's a CISD, which is a minor market structure shift. Now, why is that minor market structure? Because if I want to see the major market structure shift, there's going to be a closure above the swing high here. The closure above, then we confirm the major market structure shift. So you can see that we already have the manipulation fair value gap. That's one phase of manipulation. We have another phase of manipulation here, which is the major one. Then we got the CISD, the change of state delivery, and then we started going higher. Now, what do you see on the second candle here? What happened is price closing above the previous fair value gap. That by itself, disrespecting a fair value gap is going to equal to having another PD array that is now on your side, that is now a line of defense. That's going to be a minor market structure shift also. So we have two minor market structure shift, and we have the liquidity sweep. You see how much confluences we have within this specific and single balance price range? A lot of confluences. Now we started to go higher, and then by the end of this candle, when this candle closes, we are now creating a new fair value gap, and that can be used as a bias, another confluence for a bias, as well as a POI to enter from. When combining all of those things, the fair value gap, the manipulation one, and the bias fair value gap, the fresh one, the new one, that is, the valid one within the right direction, when combining those and looking for the overlapping, so we have fair value gap here to here, and then another fair value gap here to here. The overlapping, actually, if it was, let's say, a big fair value gap here and a small one here, this one within the big one, then the balance price range is going to be the smaller one. Okay, so if you have something like this is going to be the overlapping. If we have the opposite, small one, a big one, it's going to be this one. It's going to be the overlapping. Now, if they're not inside of each other, we take the overlapping, which is from here to here. That's our BPR, that's our balance price range. That's the PD array that we trust because it has already many confluences that, you know, they're all in our favor. So you see, we started to come lower into this POI. That's a valid entry. We have different types of balance price ranges from different aspects, and that's what I'm going to be discussing in the next section. Now, for example, let's just identify any balance price range to confirm that we understand, or, you know, at least I was able to explain it in a good way. So one of the examples is, let's say this one right here. What do we see is price taken a liquidity level. That's the first thing. And that's, again, an optional, but it doesn't mean that you don't need to do it. It's optional, yes, but when you do it, it's going to actually, you know, give you a much higher reward to risk, a much higher win rate. Okay, so that's one of the first thing. Now you see, instead of looking at any normal fair value gap, what we're going to do is look for a PPR instead. What do you see here? As prices coming lower, we created a fair value gap. And at the same time, when we're creating this fair value gap, we're already sweeping a liquidity level. Sweep of a liquidity level into an order block, then creating another fair value gap on the other direction, inversing the previous fair value gap, which is the manipulation fair value gap. That's, first of all, a minor market structure shift. Another minor market structure shift is the closure above the last bearish candle, which is a CISD. All of those things create now a balance price range. We have a fair value gap here. Now let's zoom in. We have a bearish fair value gap here. That's one. On the other side, we have a bullish fair value gap that is here. Now, we talked about this, that if we have a smaller fair value gap inside of the big one, automatically the balance price range will be the smaller fair value gap, which is right here. And you see, that's exactly where price reacted off on the 15 minutes, started going higher immediately there. Now, do we see another balance price range? We can actually see that we have, as we're coming lower, but this one was into an order block. You see here, we created a fair value gap, and then we created another fair value gap on the other direction. Again, the same thing happening here. We have a big fair value gap and a smaller fair value gap inside of each other, which now we can automatically say that the smaller one is the balance price range. It's this one right here. And you can see price came here and started going up. Now, again, it's not going to work all the time, but at least you can see that we had a reaction of it. Now, again, same thing happening again here. You can see we're starting to come lower. We actually swept this liquidity level here, sweep of this liquidity level, and then we created a manipulation fair value gap, another fair value gap to the upside. Is this inside of the big one? Yes. Then that means the smaller one is the balance price range. And you see exactly a sniper entry from there going higher. That's how you get those sniper entries. Now, we have different types. This was just, testing that you're able to identify the balance price ranges on the chart. But we have different types of balance price ranges from different aspects. The first one is the aspect of sharpness, which means that how fast the balance price range is created. Now, we could have two types, right? The first one is an immediate balance price range, which means that we're just going up, coming lower immediately, creating that balance price range. A delayed one, on the other hand, is going to be a little bit different. It's going to be something like this, where we actually go up, maybe create a fair value gap here, but then we are hanging around here, and then we started to come lower. So you see, we got a fair value gap here, and we have another one here. This is a delayed balance price range because we had a lot of price action and a lot of price movements here before the creation of the balance price range. So it was not an immediate creation of a balance price range. Now, which one I like more? Both are valid, but this one I like more. Okay, this one I like more, especially if price also comes back to that balance price range immediately. That's what I like. The same as the example that I show you just earlier here, right? This is the one, where was it? Yeah, here. You see, it's an immediate balance price range, and it's an immediate touch into that, rebalancing the fair value gap going higher. That's what I like. Now, from another aspect, it could be also, and it's similar to this here. We could also have a clean balance price range and not a clean balance price range. I don't really care a lot about the names, because what I care more about is the understanding of what I'm trying to say. I could call it fancy names, but it's not going to change anything. Maybe it's going to make you more confused, more impressed, but that's not the thing that I'm looking for. Okay, so what do we see here? Clean balance price range means that price is going up, coming lower. Between this fair value gap and this one, there is no price action involved here, even if it was a wick. Okay, there was nothing here. Most likely, if you're looking for a clean and an immediate balance price range, it's gonna be something like this, where first candle, let's say price is going up. We have, this is first candle, second candle, and you see the third candle here is the third candle for this fair value gap to be created, and it's also the first candle for the second fair value gap to be created. You see, we got two fair value gaps, but the candle, this one here, the third candle in the first fair value gap and the first one in the second fair value gap, it's a common candle for this one and for this one. Okay, when I see something like this where we have a common candle in between, this is definitely a clean balance price range, and it's an immediate balance price range. Okay, but if we have something like this, you see, if we're back to this, we had a balance price range, for example, here. If this price action here was actually coming inside of those fair value gaps, something like this, or the first fair value gap, and then we break below, that's now not a clean balance price range. Does that mean we cannot trade it? No, we can absolutely trade it, and it's going to be also a high probability one. But I call it not a clean one, because when we have, not a clean balance price range, then the first thing we can do is refine it. And how do we refine it? By looking for the overlapping. This is where we have overlapping. So you see here, we have a fair value gap closing below a low, for example. That's now an overlapping, where I could actually look for the balance price range to be around here, a small area. Does that mean it's going to be literally coming here and coming lower? Maybe, but it could also go up and come lower. Again, it's not guaranteed, right? So it's all about probability. But we can actually minimize, especially if it was a little bit bigger here, something like this, a bigger zone. We can actually trust this zone, or maybe here, okay, or this overlapping, or maybe this overlapping if it was part of the balance price range. We're not sure about where price, how deep it's gonna retrace. That's why we take confirmations entry, and that's what we're gonna cover on the next sections of the video. Okay, so this is not a clean price action. It doesn't mean that we cannot trade it. We can, it's a high probability, but we look for the overlapping. So this is just the names that I use in order to know how to deal with each one. Okay, so this is not a clean price action, or not a clean actually balance price range. How do we look for this on the chart? A clean balance price range would be this one right here. You see, we had fair value gap. This fair value gap, there is no price action that's coming here. And that's the other fair value gap. Price exactly came here, started going lower. Okay, now let's see, we also have another one here. That's another balance price range, but I'm looking for one that is not clean. Okay, so let's see. Okay, there is one. So I mean, as I said again, you can definitely trade the all different types of balance price ranges. What we see here is this one. You can see that we have a fair value gap here, but why is this fair value gap a high probability one? Because we actually had on the other side, on the bullish curve, right, or the buy curve, we had another fair value gap that is here. This fair value gap was actually used before the creation of the balance price range. It was used as an inducement. You see, price was coming lower, started going up, then a sweep, we started coming lower. So you see this move here, it might be a market structure shift on the lower side in order to convince people to enter from here. That's why we get a wick here, but then we disrespect the whole thing. and then we create another fair value gap. Where's the overlapping? If I take this and then maybe pick another color, okay, so let's say this color here, the overlapping is from this low, because it's inside, you see here, to this high. But then this is where it fits the other fair value gap too. So that's the overlapping, the blue one here, that's the overlapping. And that's exactly where price came to, started coming lower. And now we have this low, but this is out of the overlapping. We have this body of the low, right? And that's how we get a very refined balanced price range where you can get sniper entries. Again, you see here, very nicely done. This is a delayed and not a clean balanced price range. So this is a perfect example to ensure understanding. Let's look at this. Look at how many times we have a balanced price range and it's respected very accurately. You see here, what we had is fair value gap to the upside, another fair value gap to the upside, and then no fair value gap here. On this side, we have a very small fair value gap here, but then another big one here. In this big one, we look for the overlapping of, or the balanced price range, the overlapping of two fair value gaps. You can actually have this one here, which overlap with this part of the fair value gap. This one here overlap with the whole part of the fair value gap. You can see the extreme one, price came to it with a wick. The one below, price also came with a wick and started rejection. So both of those are valid, but this one, the extreme one, is more higher in probability. So you should always really prefer to look for the extreme one instead. So when it comes to the trading plan, we always keep it simple, and in reality, simplicity wins, because you really want to look for something that is simple so you can identify it easier when it comes to the price action and the developing price action. Not the price action that just happened in hindsight, no, the one that is going to happen. All what we are going to look for is a higher time frame PPR and then a lower time frame confirmation. This is the traditional way to trade, and this is after 5-6 years of trading, this is how you come to a realization that it's all about the time frame alignment. Okay, so higher time frame to lower time frame, we're gonna go from weekly to 4 hour, daily 1 hour, 4 hour 15 minutes, or 15 minute to 1 minute. All I'm looking for is a valid confirmation, whatever, any type of entry that you prefer to enter off the trade, any confirmation entry, either a creation of a fair value gap or a CISD or 2022 mentorship model, which is a sweep market section shift with a fair value gap, or you could also look for another PPR on the lower time frame created here, right? So any of those entries is valid as long as you pick the valid PPR that is aligning also with another level. It's even better to look at it this way. So we could also look at it in another perspective, which is the higher time frame and then intermediate and then lower time frame, which is we're gonna go from 4 hour to 15 minutes for the POI to be created here, and then a lower time frame, which is the 1 minute time frame, to look for an entry. You could also look at it in this way, but if you're aiming for lower reward to risk, you could look at it in this way, 2 time frames. If you're aiming for higher reward to risk, obviously less trades, then you can look for this time frame alignment, and I'll leave a video on the description, and it's going to be suggested now for this type of time frame alignment. Okay, so all what we're looking for is this, simply higher time frame PPR, lower time frame confirmation. I'm going to go over some examples now. Let's see how we can actually look at this from this perspective, the 2 time frames, higher time frame and lower time frame in different time frames. For example, looking at gold, those are some of the balanced price ranges that we discussed before. For example, we got this one, fair value gap here. Balanced price range would be somewhere in here. Okay, that's one. And another one to the upside after this sweep is gonna be this one. That's another balanced price range. We're gonna see how price reacted of those levels. Okay, so we're gonna go to 1 minute time frame, look for a confirmation at those levels. You see, actually inside of here we got an overlapping on the lower time frame. Inside of this PPR we got this overlapping, so I really prefer to see price come in here. Okay, so playing the price action, you can see price started going higher. Let's see, Okay, that's a CSD, that's a change of state delivery because we closed below, but price did not come to the overlapping. You could still execute on this one, which is, for example, entering from the order block, the retracement, or entering immediately from here because we got a 3 candle pattern. You could have covered the balance pass range and target 3 to 1, for example. You could do 3 to 1, right? Or 4 to 1. Let's do 4 to 1. That's one type of entry. Another type is waiting for the overlapping. Let's see, we started going up. We go to the overlapping, and now we're about to see actually a balance pass range here. Another balance pass range. We could have entered from this one. So that's another type of entry, which is entering of the balance pass range. Again, covering the balance pass range. Then let's say same target. You see, we don't get, okay, we get actually the entry here, and then started to come lower. And yeah, we hit take profit. So you see, we got two types. Now, do not think that every time you're gonna get the BPR entry because it's really high in reward to risk. It's not gonna be every time. You're gonna miss trade sometimes, and you need to use the CISD. So it's all about, you know, how you look at probabilities and how you look at your trading opportunities. You do the evaluation and you decide yourself about the one that fits you more and fits your psychology. We started to come lower, right? And we can see that we have another PPR here on the 15 minutes. That's the creation of the balance pass range. So we created the balance pass range. We see inside of it is, you know, we got the overlapping as well as a low inside. So that's a high probability one. Okay. Okay, we sweep that one and then we started going higher. Now you could have looked at the entry of the 3 candle pattern here. Stop loss covering the PPR and targeting again 4 to 1. Let's do that the same as we've done with that one, the other one. That's one entry. Another entry, we have a small balance pass range here, a very small one. So that's another entry, which is, yeah, around this level here with the overlapping. So that's another entry we could have used here. That's another one covering the balance pass range, targeting the same target. Okay, that's another entry. Another type. Let's see, we started going up. We got a fair value gap here. This is a breakaway gap, which we're not really sure if it's going to be filled, but this one is going to be filled and we get it filled here. But another type of entry that I see now, and I've talked about it before, is the hidden order block. Now, if you understand the hidden order block, most of the time it's going to prevent whatever below it or above it in a bullish scenario. Whatever below it is going to be prevented from being filled just because of that hidden order block. So you see this fair value gap here, not really confident about it much because the probability of this fair value gap or balance pass range is lower to be filled, unlike the hidden order block, which is higher probability. If you don't understand hidden order blocks, then make sure to watch my video about them. That's going to be suggested now or in the description. So you see, that's a hidden order block. Actually, I'm going to adjust it here, covering maybe the low here, just the low, and targeting the same target. You can see playing the price action very close to that hidden order block. And then I think, yeah, I think we came to it exactly there. You see, exactly to the hidden order block. And we pushed higher, I guess. Let's see. Okay, we push higher from here. I'm going to switch to 15 minutes just to make it faster here because it's out of kill zone and it's going to take much more time, right? And then we started going higher. I think it was about to hit the take profit here, but I think it hit 3 to 1 already. So at least you're out with 50% of your position and break even. Now, the same thing happening here. For example, we can see that we have this PPR. If we go back in time and switch to 1 minute time frame, because that's the right time frame alignment, inside of this balance pass range, we can see that we got this order block as well as we got this low also and this low. So those are the levels that price could actually retrace back to. Okay, so you see, came here, the first level, a bit of a reaction, but no CISD. We got a CISD here after hitting the second level and the fair value gap here with the overlapping. We could have entered here with a CISD, stop loss goes below it, and then targeting 4 to 1, for example, again. Let's see. Okay, let's do it like this. 4 to 1, we started going up, and yeah, and we hit the take profit. So yeah, very nicely. And you see another PPR here on the 1 minute time frame, another respect. So that's how we execute on the balanced price range. This is what I want you to stick with. Now you could go to 4 hour again, 4 hour, look for a balanced price range on the 4 hour and execute on the lower time frame, which is going to be the 15-minute time frame. You want to really look for a bit of a smaller balanced price ranges, because big ones, you're going to have big stop losses to cover the balanced price range. For example, one of the smallest balanced price range that I see now is this one, and look at the snapper entry that you could have gotten. You see here, it literally came here and then shoots lower aggressively. Unlike if we have this big balanced price range, we could still look for one, but to cover the BPR, you're gonna need a bigger stop loss. But sometime if you see that one as really a good confirmation, you could have put it below the swing low instead of the balanced price range. So if we get the confirmation here, you could have put your stop loss a little bit below the swing low. Doesn't need to be below the balanced price range. Okay, but remember that sometime, it's all about the relationship between high and low reward to risk and the high and low win rate. Okay, it's all a relationship between the two. So that's it for the video. I hope that I've done a good job explaining the PPR, and I hope that someone take advantage of this lesson, apply it on the charts, and I promise you that you're going to see a change in your trading, because this specific PD array is really a game changer, really a game changer. I wish you the best. Keep learning, keep applying on the chart, and keep backtesting, and you're going to get there. This is Mulham, and I'll see you next video.